Good morning, Predicted Trades family. Hope everybody's doing well. You'll have to forgive me, I have a little bit of a cold going on. But let's zoom in here. Let's start to do prep. We have a little drop that started around 6 a.m. Brought us back down to the lows of yesterday's range and back down to key levels. We are at the bottom of a number of squeezes. The 2 hour, the 1 hour, yada yada. Just taking a look. ES has squeezes, not on the 4 hour, but the 2 hour and the daily. So let's take a quick look at the fact that we got down and settled at the bottom of a 2-day squeeze. We've made a nice push up over the last week or so to the top of the daily squeeze. Yesterday we got up and tapped 40-20 and our trend lines from the highs of last year, where we consolidated yesterday. Now we're starting to see a drift back on this overnight session. So it makes the premise for today very simple. Basically, we need to hold this zone of key levels from 39.61 to 39.53. If we start to give out that 39.61, it's looking very likely that we get down to 39.41 for a test. Our daily 8 EMA has caught up to 39.41. So giving out this 39.61 very much lends to the premise of at least getting down to this 39.41 for a test at our daily 8. Looking for a bounce there for any upside today. We did get above our daily 200 yesterday, this yellow line, but as you can see overnight, we've fallen below it. So this also sets up a premise of holding at this zone, getting back to the daily 200, and then rolling over back to these daily moving averages below. So that daily 200 will be interesting and key at open. If we do get a rally, looking for a potential rejection there and a roll back over as a likely scenario to be ready for. Now, can we fight back above the daily 200 and push back up against this daily squeeze top, 2 hour squeeze top, key levels, and the trend line from high of year? Yeah, we can definitely get back above, turn it into support, and push up to try to break out. But overall, we need to be ready for the likely rejection. If we stay below this daily 200 and reject to come back down, then we should be expecting this 39.41 daily 8, and then past that, if we start to give out, our daily 21 has caught up pretty close to this 39.22. Our daily 15 sits right down below 3900. So we have some key targets to the downside at these daily moving averages. We are running into resistance. Trend lines from high of last year. Key level at 40.20, top of a daily squeeze after coming off of the bottom of a 2-day squeeze. So we need to be ready for the potential rollover back to daily moving averages. And as you can see, our daily 15 has caught up near recent lows, near our last moving average test that brought us higher. So even though we could break down, staying above these moving averages is still potentially bullish and just finding buyers, finding liquidity before trying to get through trend lines from highs of last year. Now, could we have enough momentum to just hold, get back above the daily 200 and break through this trend line? Sure. But we are moving into an interesting cycle of earnings. that could lend to the idea of running into the squeeze top, failing back down to moving averages, and settling before trying to head higher. Let's take a quick look at our earnings schedule. So, for the entire month, we can see that today we have a whole bunch of banks reporting and a little bit of travel. Moving into next week, we have a lot more banks and financial institutions reporting. We have Netflix next week. And then moving in to the rest of the month, we have a whole bunch of energy, chips, Tesla, more travel, and then we start to get into energy with some oil companies reporting. You can see Chevron, you can see 66, Marathon, yada yada. So we have a lot of banks, a lot of financials next week, and that kicks off today. And we have a lot of oil coming up, a lot of energy sectors reporting before the end of the month. It looks like the majority of our big tech names like Apple, Amazon, yada yada are not this month, but getting into next month. And then as we move down and look at this week, we did have some chips yesterday with TSM, and then today we have Bank of America, United Health Group, UNH, one of the biggest names in healthcare in the XLV sector. We have Bank of America, JPM, Citi, Wells Fargo, a bunch of finance reporting today and kicking off the finance week, which bleeds over into next week. So, very interesting to see what happens with JP Morgan, Bank of America, United Health, Delta, Citi, Wells Fargo, all before open. We'll start to set the tone for today. Finance has been on a good run. We'll have to see how earnings go, but it could start to spell a reversal. So we need to be ready for that. And let's take a quick look at our economic calendar as well, just to see what we have today and into next week. So for today, we have a little bit of import price index that came out at 8:30. Not much of a reaction we can see so far. Basically, we're on a little bleed. It might start to help bounce us. The big one today is the University of Michigan data coming out at 10 a.m. We do have a Fed speaker also at 10 a.m. Actually, two Fed speakers. Neil Patrick Harker. So close. Neil Patrick Harris. Anyway, so it looks like after about 10:30, we should be clear of data drops and speakers for the day. Looking ahead to next week, we have on Tuesday, we have some manufacturing data. On Wednesday, we have some retail sales and a little bit of home data. And then the beige book at 2 p.m. on Wednesday, that'll be a big one. And Thursday, we have jobless claims, some more homes data, housing data. So a pretty light week next week as far as economic data, although it is an OPEX week. So that January 20th is options expiration for the month. Something to keep in mind as we move into next week. So just looking at today, overall looking for this zone to try to hold just like it did yesterday. We start to give out that 39.61 and test yesterday's lows. Then we start to open up the door of giving out, rolling over to this 39.41. That's kind of the last saving grace to bounce us back up into the squeeze. Otherwise, we are going from that 39.41 down to 39.22 where the daily 21 sits, and then 3900, 38.93 where the daily 15 sits. So we need to be ready for that breakdown, but ultimately if we can hold up at this zone, then we could get the same kind of play as yesterday, scooping back up to this 40.20 for a test at the top of this daily squeeze. Sorry, just wanted to answer some questions. And yeah, Johnny, if you're interested in joining, you can either sign up in Discord, there are links there, or on our website. So let's see if we can hold the bottom of this 2-hour squeeze, start to pop back up to this daily 200. I'm at least expecting that interaction. A little drive up to the daily 200. The daily 200 kind of splitting that squeeze and this overall range that we're stuck in. We can fight up to the daily 200, but if we start to reject and roll back over, we need to be ready to short past the bottom of the squeeze back down to these daily moving averages. If we can get through the daily, if we can get through the daily 200 and start to hold above, then it's very much like yesterday, mounting attacks at this 40.20 sell wall that we seem to have hit. Also, trend lines from highs of last year. So if we're going to break out, we're going to run into this wall, come back, run into the wall, come back, until we build up energy and keep setting higher lows to get through. Otherwise, we're just running into this wall and starting to roll over and break down back to our daily moving averages as our first targets. So we've got our levels to the downside, levels to the upside if we can bounce or if we reject. Moving on to NQ. Damn it, I'm sorry. I thought but apparently I failed to mute. Excuse me. Like I said, dealing with a pretty bad cold here. On NQ, we're trying to hold near this daily 50, and we have this support zone that we drew the other day in prep. So basically looking for this support zone to hold and start to bounce us above the daily 50, back to try to fill the gap into this 11,500. If we reject or if we can't hold, then we're likely falling back to the daily 21, down 11,250-ish. But if we can hold and start to get above the daily 50, looking to get back to this 11,500, and then try to push to yesterday's highs up near this 11,600. Moving on to the ready. So, ready, trying to hold kind of near yesterday's pre-market highs, and where we consolidated a little bit midday before breaking out higher. Basically looking for ready to hold above 1865, 1870. That's kind of your zone of support. If we can hold there, looking to get a bounce back up to fill the gap and try to push higher up to 1900. But if we ultimately give out that 1865, we need to be targeting 1850, and then 1835, 1832, where the daily 8, daily 200 sit. YM. Still doing a decent job holding above 34,000. And just like we drew in prep the other day, looking for that 34,000. And now this 39,950 up to 34,000 to hold. You can see that now the 2-hour squeeze sits right at that zone. So basically looking for support at the bottom of that 2-hour squeeze and near this 34,000. If we can hold there and start to bounce, looking to get back up to fill the gap, we want to watch 34,175. That's a potential rejection point at that daily Keltner before getting back to completely filling the gap. And if we can get above that daily Keltner and turn it into support, looking to carry up to fill the gap and get back to yesterday's highs up near 34,500 as the target. If we do start to roll over and lose 34,000 the bottom of this 2-hour squeeze, then we want to target 33,850 where the daily 8 sits and 33,650 where the daily 21 sits. The daily 50 just a hair below 33,600. So we've got our targets to the downside and upside. Moving on to Apple. So Apple arrived up at our zone here, starting to slip below pre-market. Overall, looking for Apple to hold above 131.5, 132. If we can hold there at the bottom of this 2-hour squeeze, looking to push back up to 132.5, 133, our zone above, and then back to yesterday's highs around 134.5 in an effort to push up to 135, 136. But if we start to give out and lose yesterday's lows, then we would need to be targeting 131 at the bottom of the 2-hour squeeze, and below that 130 and 129.13. Yeah, 129.13, 128.5 our zone below if we start to give out this 2-hour squeeze bottom. Amazon. This is AMD. Well, while we're here, AMD, I would be looking for it to hold 69 at the worst. That's where we topped out earlier in the week. We can hold above 69, get back above 70. Would look for a push to 72.3. We start to lose 69. The daily 50 at 68.5, and then below that, down near 67, is the daily 21, daily 8 on AMD. Moving on to Amazon. Amazon got up to our key level 97 yesterday, starting to come back a little bit. Looking to be opening below yesterday's low. At the very least, I'd want to see this 92.5 hold, kind of the last bounce point from Wednesday, and all of price action yesterday was above. So at the very least, looking for 92.5 to hold right near the bottom of this 2-hour squeeze bottom. If we can hold there, looking to fight back up to 95, 97, and try to make a push to 100. But if we're going to roll over today, and if we lose 92.5, you want to target 91, 90, where some moving averages sit, and 88.5, where the daily 21 sits. Google. Google made it up to this zone around 91, 92 yesterday. Coming back, the daily 21 sits pretty much right at 90, so looking for 90 to hold us. and bounce us back up into this squeeze into recapture yesterday, back up to highs into the daily 50. If we start to lose that 90, the daily 21, we want to target 89, and then 88.5 where the daily 15 sits. Meta. And just for the heck of it, let's look at JPM. Looks like they've already reported slightly better than expected. Negative reaction and back down to moving averages. So let's see if JPM can quickly catch a bounce and if finance can quickly catch a bounce and start to rally. Otherwise, they've already started to give the sign that they are ready to head back down. In fact, JP Morgan was a big part of this drop that we're seeing here. So have to settle and hold and start to bounce back up to fill the gap. Otherwise, she'll roll over and the market might start to slip. Over to Meta, been very strong. Drew a couple of trend lines. If we start to give out the first trend line around 134.5, then we want to be targeting the next trend line down near 131.5, 132, where our zone of support sits. But if we can hold this trend line, 134.5-ish, and start to bounce, looking to get back to fill the gap, back to 136.7, 137.1, the highs from yesterday, and up to the psych level of 140. But if we start to give out and lose that 134.5, you want to target 132 and 130 where the daily 8 sits back near yesterday's pre-market low. Below 130, we should be targeting back to 125-ish where the daily 21, daily 15 sit on Meta. Microsoft made it up to the daily 50 yesterday, pulling back to the daily 21. So stuck between some liquidity levels. If we can hold the daily 21 around 136.5, call it 136 as well. If we can hold here, looking to bounce back up to fill the gap to 138.5, get back up near yesterday's highs at this daily 50 near 240, and to try to push up to 241. 243. But if we do start to give out the daily 21 on Microsoft, then you want to target back to this 232, 230 on Microsoft. Netflix. Dealing with a decent gap down. Yesterday made it up to this 133, geez Louise. 333. I don't know why I keep saying 133 or whatnot, but Netflix effectively has filled the gap from the last earnings. Netflix has earnings next week. Overall, looking for it to hold above this 320, 323. That's our zone of support down at the bottom of this 2-hour squeeze. But if we can hold there or 325, looking for a bounce to try to get back up to 330, 333, and try to make a push to 340. If we do start to lose that 323, we want to target 317, the daily 8, and potentially back down to 310, 307, where the daily 21 sits. On NVIDIA, pretty strong push yesterday, making it back to the daily 200. But they're basically looking for it to hold above 160 as it sits at 162 right now. As long as it can hold above 160 and 162, looking for a bounce back up to fill the gap to 165, back up to yesterday's highs in the daily 200, and then try to push further to 170. But if we do start to lose 160, you want to be targeting back to 155 where the daily 21 sits. The daily 50 at 157, so a little 2-point range with a bunch of liquidity. QQQ. So QQQ about to open in the bottom of this 2-hour squeeze. Looking for it to try to hold here at this trend line from recent highs. Around this 275.5, 276. If we can hold here and start to catch a bounce early, looking to get back to fill the gap to 279. Get back to this 280 and try to break out to the upside to 285. I'm not saying we necessarily get that all today. We do have some tight squeezes that we could stay confined in. If we start to break down below 275, we want to target yesterday's lows near 273.5 pre-market, and then back down to this 272 where the daily 21, daily 8 sit. SPX. Definitely filled the gap yesterday, stayed above this gap, moving up, dealing with a 40-point gap down, so going to be opening near 39.40-ish, near yesterday's lows. Let's see if 39.40, 37.5 can provide support to bounce us back up to try to fill the gap. Keep an eye on that daily 200. If we start to give out yesterday's lows, we want to be targeting down to fill this gap between 39.30, 39.20, and below that, the daily 50, daily 8 sit at 39.13, we'll call it. The daily 21, a hair below 39. So we've got plenty of downside targets with these daily liquidity levels, these daily moving averages. Spy. Need to clean up some of these trend lines. So, I mean, as you can see, we were kind of in an up channel. We're starting to break down out of that, so we need to be ready for the rollover. Ultimately on SPY, looking for this zone to try to hold us at 392.66, 392.5-ish. If we can hold around there and start to bounce back above the 393.5, it starts to set up for a recovery back to fill the gap. We want to keep an eye on the daily 200, which does sit back above pre-market highs. And we want to keep an eye on this 395. You know, we could catch a little bounce here back to 395, kind of get that half gap fill before rolling over. If we do start to break below 392.5, we want to be targeting down to 391.5, kind of our last bounce point. And then below that, down to 390, where the daily 50, daily 8 sits, the daily 21 back down at this 388.5. So very key targets to the downside at that 390, 388.5, if we start to give out 392.5, 392. Tesla. Having a big old gap down from that 122, 123 zone where POC has established itself, gapping right back down at the bottom of a 4-hour squeeze. So ultimately looking for this 4-hour squeeze bottom to hold from 114 up to 116. If we can hold here, start to get a bounce to recover and fill the gap. If we start to give out this 4-hour squeeze bottom, we want to target 112.5, 110, and then back down to this zone around 105. on VIX. So on VIX, with this little gap down, just popping right back up to 19.5. If we're going to get a pop and gap fill, I want to see VIX stay below 19.5, head back below 19. That opens the upside so that we can get that gap fill or partial gap fill. But if we hold above 19, or if we get above 19.5 and hold, we'll be looking for downside on the market. We'll be looking for VIX to get back up to 20 and 20.5 where the daily 8 sits after coming off the bottom of this 2-day and 1-day squeeze. But if we can continue to the upside, get right back up to the highs of yesterday and continue to push, looking for VIX to stay at the very least below this 19.7, 19.5, head back below 19 and keep trudging on down to 18. If we're truly going to get a rally back up to trend lines from high of last year. So that's it for prep today. Hopefully everybody found this helpful. Definitely come join our Discord group. Good luck to everybody today. It's a Friday, so size down, have fun. We've had a very strong week. So let's play with profits today and have fun. Don't try to make or break your week on a Friday, because chances are you'll end up breaking it even further. But overall, good luck today, folks, and we'll see everybody in the chat.